morning, everybody. Good afternoon and good evening. What's super dot world you're watching? This is Donna, and this will be a market review for the trades that I took last week, which I only took last week was Ethereum, XAUUSD, and what pair was that again? And I think I took a loss on that trade. What trade was that? Okay, I took JP225. That's Japan 225. Japan 225. Now, I'll be talking about Ethereum and XAUUSD. I'll be talking about all of them on this market review. The reasons why I took the trade, the reasons what made me took the trade, and what was my thought process on it. That's just everything. It's still what it means. The reason why I took the trade. Now, starting from Ethereum, I'll go to Ethereum USD and tell you why I took the trade. This is Ethereum on daily time frame. Let me just quickly clear everything here. Now, we have a blank chart here on Ethereum. Now, Ethereum USD, we've been having some sales lately. As you can see from daily time frame, market has been in a bearish order flow. Now, we all know that on market structure, whenever market is going on a downtrend, we mostly have a break of structure. After this break of structure, we will experience what we call a retracement, then a continuation of the sell, of the bearish trend. After a break of structure, we have a retracement. Now, if you look closely at this zone, if you look closely here, we had a break of structure. Market will give us a retracement and steady selling off. Now, when market caused a break of structure here, what we normally expect after a break of structure is a pullback. That's a retracement here. Now, because this is on the daily time frame, I can't really tell if this is the starting of the retracement for the sell to continue. I don't know if market will just approach this zone and start selling, or go further up and start selling. Now, I don't just know. What I'll do, I'll stick to my word. I'll stick to my weekly time frame to see if market has really rejected from that zone. Now, on the 1 week time frame, I trade with two important things. I trade with CRT and key level. Now, here on the weekly time frame, when market gave us a break of structure and closed with what a body candlestick, signaling that there are sell pressure. The sell pressure is high. Now, we normally do trade what we call structure, liquidity, and a violated point of interest. Now, here, after market gave us a break of structure, we should expect some form of liquidity either before this break of structure or after this break of structure. Any of them. But the one we happen to see is the after, and using that after, we pair it with what we call our CRT. Market takes out this liquidity and tap for either a breaker block or a fair value gap. Now, with all this explanation, bear in mind that this is a break of structure. This remains the pullback here. This is what we use as our liquidity for the first sell that happened. Now, because this is the first sell that happened, and if you look closely, this is a gap. Now, we call this invalidation zone or fair value gap. Now, using this Gantt box here, I'll trace from this candle wick to this one here. As you can see, when market approached the 0.5% zone, it sold off. The moment it sold off from that 0.5, that we call it a golden ratio. It sold off, and this is my CRT target here. That's the closest draw on liquidity. I sold to that zone. Now, we've now had something like this on the lower time frame. Market taken out this low. This is the low that market took out and gave us a break of structure. So what we are expected for market is for market to give us a retracement and start selling. But because the retracement has not yet, the retracement has already happened. That is bullish candlestick that popped up for last week. How did I join in for the buys? Because I took a buy on Ethereum USD. After this break of structure, hold on. Let me clear this thing. So after this break of structure here, I should be expecting some retracement. So to this retracement is what is this bullish candlestick. Now let's go to the lower time frame and see the reason why I sold. Why I bought Ethereum USD last week. On the daily time frame, still the same concept on the CRT. So after we had this break of structure of this low here, now we are expected to see some form of retracement. If you look closely, market broke structure. Market took out this low and gave us with a weak candlestick. The weak candlestick here rejected. Now it rejected, and the whole the whole expectation for this thing is that market closed below this week. That as it did, it closed below this week. Then the next candle was supposed to pump up to take out towards the draw on liquidity here. That's this one. But what the market do, it gave us this is what we call a purge of liquidity. Why is it purge of liquidity? Because market closed here with a weak signal rejection. For this second week here, market weaked it out and closed below. So this is what we call a purge of liquidity, because it didn't close with a body candlestick. That's a rejection. Now here, market retraced back and gave us what we call a CRT. Here was the closure in it, and this is our target here for the buy. So market approached that buy. But let us go to the lower time frame and see what market did on that zone. Now on the 4-hour time frame, here on the 4-hour time frame, we already know that market was supposed to retrace. On the 4-hour time frame, when I saw some structural shift there, here right at this zone, remember this is our this is our purge of liquidity, because market swept liquidity there. So this remains our pool here, and after that pool we had a lower high, a lower low, a lower high, a lower low, and all these lower highs here, market took all of them out. Do you understand? Market took all of them out. This became our change of character, or what you call a market structure shift. Now going to the 1-hour time frame, I want to see some form of liquidity that formed. So this is a shift. That's a change of character, or what you call a market structure shift, MSS. And normally, after we've gotten our structural aspect of the strategy, we need to look for the liquidity. And I told you guys that we had two types of liquidity. First of all, sweep, and we have liquidity before break of structure, buy, and we have what we call liquidity afterwards, after a break of structure, then you buy. This for the continuation. For the market structure aspect, for example, market has been on a bullish trend, and then market wanted to shift. Market says shifting structure. It might give us a pullback before it takes out this low that cost a break of structure. That's this low. This low becomes your market structure shift, and this low and this high becomes our liquidity before the market structure shift, and we sell from here. Same thing for the sales too. So that's what happened. Let me do the sell illustration. Now for the sell, market has been selling, and this high here caused a break of structure. But now before market took out this high, it gave us a pullback before this MSS here, this high got taken out. Then this pullback here will be used as our liquidity. Then we buy. This is our liquidity. Now with this illustration here, look at it here. When market gave us this MSS here, it gave us a pullback. This pullback here is our liquidity. Now our liquidity, we need to look for a validated point of interest on the, I think on 30 minutes time frame. Sorry, on 30 minutes time frame, there was a breaker block there. This is what this is market. This is what we call our liquidity, and this remains our breaker block for you for buy. This is our breaker block because it is the point of interest that is validated. That's validated by liquidity. So I'll mark it out and move it to the extent. Now here is where market triggered for that buy here, and boom, I entered for that buy. And because our closest draw on liquidity remains this high is our draw on liquidity, because this is where market is going to what? It's going to hit, because after this MSS happened, we normally do have a bearish trend starting from this high here. This is what we call our general liquidity from this high to this zone. So market shifted structure below on this high here. So we experience what? The market structure shift. Then we are buying to this what? Draw on liquidity. That's the CRT there. So that's what made me, I took the buy until market will hit our target there. That's our take profit. This is 1:14 risk to reward ratio. This is 1:14 risk to reward ratio. This is for Ethereum USD, the buys on Ethereum USD. And let's take Ethereum USD and XAUUSD too. XAUUSD was a buy. Now, still the same concept I told you. After maybe market has taken out a low, if we are in a bearish trend, we must experience what? A retracement for the low, for the sales to continue. Now, on XAUUSD on the higher time frame, I will use the 1 week time frame for this illustration. If it's not clear, okay, it's not clear, because what we're talking about is structure here. On the daily time frame here, when market sold off, this was last high on the market, and market was sold off, and it caused what? A break of structure here on this zone. It caused a break of structure here on this zone. Now, after this break of structure, we must start experiencing what we call our pullback. That after a break of structure, we experience some pullback for the sales to continue. Now, for we to join in for the retracement, that's the pullbacks, we need two key things: liquidity and what we call structure. After market gave us this break of structure here, we start looking for concepts that reverses the trend for it to come to this zone and start selling. Now we start looking for what? We want to look for buys until this zone gets approached and the sales start kicking off. We go to the lower time frame on the 4 hour. So on the 4 hour time frame, we had this move, this extensive move. That's what we call continuation move. Then we had what? A retracement. Now on this retracement here, this low was the last low on the market, and we had a weak high here. Why is it called a weak high? Because this high was not able to cause a break of structure. Taking out this low, sorry. So this high becomes what we call a weak high. Going to the 3 hour time frame, we want to see some form of rejection on that zone. Now, after we've seen this high has been violated, it does not really mean that the market has changed its structure. What we want to notice is we want to see some form of structural shift from a protected higher low. So we are not able to see it there. So we stick to this words. We stick to this high. Then we saw, because this is a weak high, this is what we call MSS, but it's not completely MSS. This is what a weak high. After this high has been taken out, we saw some pullbacks before the high got taken out. This remains the pullback here, and this is the last zone. This zone here remains the last. This is a pullback. So any zone below this pullback is what we're going to use as far as it meets up to the standard where we pick our point of interest. That is the rules of picking the point of interest. This is our pullback, and if you look closely here, we have an FVG zone. Using our Gann box, we mark it from this high, from this week to this week here. Then the 0.5 zone is this single candle order block here. So we mark out the single candle order block and extend it to this side. So it was where markets later reacted from. So when market reacted from that zone, it caused a break of structure, meaning that the trend has shifted structure. It has shifted from it being bearish for the meantime to bullish. That's what retracement. Now we go to the 1 hour time frame in order for us to join for the retracement. Now on the 1 hour time frame, when market gave us this break of structure here, we had, let me see if we had any pullback there. So okay, this was when the market started buying and break of structure. This was the last high. Market took it out, gave us a pullback. After market gave us this pullback, that was not other zone we are going to. You cannot buy from here again except this zone below here. So we want to pick the zone from a time frame that we will be seeing it clearly. Now on this time frame here, on the 30 minutes time frame, it wasn't much clear. It was not that clear, so we stick to the 15 minutes. This is a market structure shift for this recent higher low. When market took it out, give us this pullback. Now it's left for us to pick either this zone here or this zone here. But for the purpose of this recording, I'll just stick to the higher time frame. So I won't really share much on how I really pick the point of interest. I'll stick to the 1 hour time frame. Then I'll pick this other block here, because it's where the swing point was. So market bought from there, and our target remains for market to take out this high. This is where we are targeting the market here. Now we want to join in for the buy, still on the 1 hour time frame here. All this is particular pattern that market used to approach this point of interest. He used a bearish trend, higher low, lower low. Lower highs and lower low, lower highs, lower low, and lower highs until he approached this zone. Yeah, so we want to join in for the buy. We went straight to the 30 minutes time frame, and this was the high that got taken out. All these zones has been mitigated, and this remains the MSS, and we had this gap here. That's this FVG zone and this liquidity. So this liquidity here was supporting a buy for this breaker block. Now for you to be sure about the trade, we mark the FVG from here to this point. Tracing that FVG, it aligns with this breaker block here. This 0.5%, that's the golden ratio. So we mark it out and draw it to the extent there. That's where the buy started. That's how the buy started moving. So we'll mark it out from this zone to this zone. Then we bought XAUUSD here to this high. Now I still had another buy on XAUUSD, that's the NFP. So here on the XAUUSD, I need to really see some form of, after market has caused this break of structure, I need to see some form of liquidity. Either the liquidity happens after this, before the break of structure or after the break of structure. Whatsoever, I need to see our liquidity. Now, this is silver, sorry. So on the silver, it's still the same thing that happened on the gold. They correlate, silver and gold, they mostly correlate. And this remains the silver. Now there is no form of pullback here because silver correlates with because silver correlates with gold. I used gold to pick my liquidity. to pick my liquidity so that I can be able to get a buy for that silver. Now here on the XAUUSD, this remains a zone that market caused what a break of structure. That break of structure we had what a pullback, a single candle pullback, and this is a breaker block closest to that single candle pullback. This buy here, that was where I entered again, but I entered for a buy here on XAUUSD, but on silver I just marked out that zone on silver. I marked out the zone on silver here. I marked out the high on silver, but I had no liquidity, but because XAUUSD correlates with silver, then I stick to silver. Then this was the last lower high that caused a break of structure here. So when market took out this high, that became our market structure shift. This cannot be used as a pullback because it has already been used for a buy here. You get it has been used for a buy there. Now we wait for what? We wait for our pullback. This is what we call a single candle pullback. This remains our pullback there. And market bought from using this FVG in the 5 minutes here. This scan box, that's the FVG here. We mark it out. Market triggered for a buy there, and we bought all the way to that recent high. So market bought from that zone there. Now this is for XAUUSD, and I think I don't have anything to talk about. So see you guys on the next one.